Applied Digital just got a major vote of confidence with Nvidia disclosing a 3.5% stake. But what does this company do? With a market cap of less than $2 billion, is this a stock I would personally invest in? By the end of this episode, we should know about the growth, the risk, recent earnings, and more. So go ahead and hit the thumbs up and subscribe button. Check out the pinned comment for more special offers at fool.com/Jose and a coupon for my semiconductor earnings book. Now, let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, first let's start with a deeper look at what Applied Digital actually does. They're not a chip company or semiconductor company. They're actually building the foundation for the AI and crypto revolution by providing the infrastructure. Applied Digital operates in three distinct business segments. The first is the data center hosting, and this is their core business as of now, accounting for about 83% of their revenue in fiscal year of 2024. They provide energized infrastructure services to crypto mining customers with a total hosting capacity of 286 megawatts across 2 sites in North Dakota. They currently serve 7 crypto mining customers who have entered in contracts ranging from 3 to 5 years. And this has pushed them into their second segment, the cloud services, which just recently launched in May of 2023. This segment is all about providing GPU computing solutions for AI and machine learning workloads. They're partnering with big names like Nvidia, Supermicro, HPE, and Dell to deliver these services. By May 31st of 2024, they had deployed roughly 6,144 GPUs with 4,096 actively recognizing revenue. So we can see this is definitely one with a nice size cluster, but still pretty small compared to maybe some of those other cloud players out there. Next, they have their high-performance computing hosting. This is their newest venture. They're building specialized data centers for HPC applications, including AI. They've got a 100 megawatt facility under construction in North Dakota with plans to expand to 400 megawatts. Now let's talk growth opportunities, because that's where the real excitement lies. The number one is AI infrastructure demand. This is the global AI market, which is expected to hit roughly $500 billion by 2027. Applied Digital is positioning itself to capture a slice of this massive pie by providing the infrastructure needed to power AI workloads. The second growth opportunity is thanks to their strategic partnerships. They're not going at it alone. Partnerships with industry giants, like I mentioned earlier, Nvidia, Supermicro, and HPE, give them credibility and access to cutting-edge technology, and these partnerships could lead to more customers and faster growth, especially with that recent announcement of Nvidia investing in this company. Number 3 is the expansion plans that I've talked about earlier. They're currently building a 100 megawatt high performance computing data center project in North Dakota, adjacent to their existing 180 megawatt data center hosting facility. They have plans to expand this to a total of 400 megawatt capacity, and this expansion includes the current 100 megawatt facility under construction and 2 additional planned buildings. The great thing is they already have a hyperscaler agreement. They have entered into an exclusivity and executive letter of intent with the US-based hyperscaler for leasing the entire 400 megawatt capacity at that facility. This includes the current 100 megawatt facility under construction and the 2 planned additional buildings. Now, let me just give you the timeline of this expansion. The first 100 megawatt facility is nearing completion and is expected to be operational in calendar year of 2025. They're pushing to have the second building, likely 150 megawatts, ready in the second half of calendar 2026, and the third building is planned for the second half of calendar of 2027. So while the AI market is growing at rapid levels, remember it takes time to build out this infrastructure. The fourth growth opportunity is as we're seeing diversification. By operating both crypto and AI markets, they're hedging their bets and creating multiple revenue streams. This could help stabilize their income as they grow. And if the AI market is as strong as we believe it is, then this is definitely a strong growth opportunity. But let's not get carried away. Every rose has its thorns, and Applied Digital is no exception. Here are some risks to consider. First, the number one is customer concentration. In their data center hosting business, they really heavily depend on just 7 crypto mining customers. One customer accounts for 62% of their revenue. That's a lot of eggs in one basket, and any issues with these key customers could severely impact their bottom line. The great thing is, though, they are moving into the AI space, and that can help offset any loss of crypto customers. Second thing is regulatory uncertainty. Both the crypto and AI industries are facing increasing scrutiny, and new regulations could impact their business models. For instance, there's growing attention on the energy consumption of crypto mining operations. Number three is competition. They're up against some big players in the data center and cloud services market. Companies like Digital Realty, Equinix, and even tech giants offering cloud services could make life difficult for Applied Digital. Number four is supply chain issues. They rely on limited number of vendors for critical components. Any disruptions could slow down their growth plans. As they mentioned in the report, if any of their key suppliers cannot perform under their contracts or satisfy their orders, it could significantly delay their data center developments and operations. So supply chain is very, very crucial. And I want to say, if the chip market is as tight as it is, normally the big spenders get the first chips. So there is a possibility of maybe some delays happening here. Number five is technological change. The rapid phase of technology change right now in both the crypto and AI industries could render their infrastructure obsolete if they don't keep up with the overall market. Now let's dive into their recent earnings to see how they're actually performing. For the fiscal first quarter of 2025, which ended in August 31st of 2024, revenue hit $60 million, up 67% from the same period last year. They are still, unfortunately, net loss. They're not profitable, so right now they are at a 3-cent loss per share. Adjusted EBITDA was $20 million, a significant improvement from $9.9 million in the previous year. And if we look at their financial position, things look a little sketchy for a growing company. They had roughly $86 million in cash and cash equivalents. This has improved from the end of fiscal 2024, but they do have a high debt of roughly $143 million. So they have more debt than cash. They are also using or burning cash. Their cash flow for the quarter, they used roughly $76 million in operating activities, primarily due to change in working capital. They invested roughly half of that in property and equipment, showing significant ongoing capital expenditure. It is worth noting that they recently completed a $450 million convertible note offering, which could significantly impact their position moving forward. But unfortunately, this does come with the potential dilution and this company needing to build up more and more equity throughout the next few quarters, throughout the next few years. Now, the CEO did mention some interesting things during their last earnings call. Let's break down some key points. First, on the cloud service business, he mentioned that as of the end of the first quarter, they had 6 clusters online. They have made significant progress on amending the lease financing for their GPUs, which is expected to complete in the current quarter. He also talks about the market demand. In the past 5 weeks, we have seen a substantial increase in interest and demand from other top-tier hyperscalers for 2025 and 2026 capacity, which is an extremely short supply. So what's the verdict? Is Applied Digital a buy or a pass? Here's my take. Applied Digital is positioned at the intersection of two explosive growth markets, crypto and AI. You guys know me, I'm very, very bullish in the AI space. So they've got some serious growth potential, especially with their move, like I mentioned, into high performance computing and cloud servers for the AI market. The Nvidia investment is a big vote of confidence, and their partnership with industry leaders are impressive. However, there are risks, and they are significant. Right now, their heavily reliance on a small numbers of customers in the crypto space is very concerning. And they're entering in a high competitive market in cloud services and AI infrastructure. Their cash burn and increasing debt levels also warrant close attention. For me, Applied Digital falls into the intriguing but speculative category. If you have a high risk tolerance and believe in the long-term potential of AI infrastructure, it might be worth considering as a small position in a diversified portfolio. But remember, this is a company that's still finding its footings in a rapidly evolving industry. Personally, I still haven't really made a decision, but it's one of those, like I mentioned earlier on, that would be a very, very small. It's more of like a gamble right now, seeing if they will be able to compete in this highly competitive space. If they can succeed, diversify their customer base, show consistent execution on their expansion plans, and improve their financial metrics, they could become a more compelling investment. Well, that's it for today's deep dive into Applied Digital. Take care and see you for more semiconductor and AI news.